With the end of Bitcoin's consolidation in sight, we can now look to previous BTC bull cycles to see which one we're most closely following. And if the data is anything to go by, we're in for a wild end to 2024. Today, we're going to be looking at which BTC cycle our current cycle is most closely following, and where better to start than the BTC growth since cycle lows chart we have here on BitcoinMagazinePro.com. And as we can see, Bitcoin, which is this black line in our current cycle, has had, as we said, a bit of a choppy consolidationary period over the last few months, what seems like forever, basically. But we can see if we just add on a few previous cycles, such as the 2018 to 2022 cycle, there's definitely some similarities there. And we're actually at a very similar point in this cycle in terms of percentage gains after the time since our cycle lows, since this cycle. And it's a very similar story for the 2015 to 2018 cycle as well. So clearly there's a little bit of a correlation and some pattern following going on, not just in price action, but likely in investor behavior at this point in our current BTC cycle. Previous cycles as well do have a little bit of correlation, but given the fact that the gains were absolutely exponential in those previous cycles, it's a little hard to just look at this visual data and really understand which one we're most closely following. So like I said, we're not going to be looking at price for this, but also investor behavior. So here we're looking at the MVRV-Z ratio, but we'll specifically just be using the MVRV ratio for this analysis today. And this is looking at the realized price or realized cap, which is the average accumulation price of all BTC on the network, just the cost basis for every single investor. So we can see currently this is at around, well, this is the realized cap, so $650 billion, which is around 33,000 US dollars, compared to the Bitcoin market cap, which is about 1.3 trillion, or as we said, about $66,000, $67,000 as I film this now. So this ratio here just looks at basically how much profit or losses investors are in. And once we see this realized price start increasing, we can see that investors are wanting to buy BTC at higher prices. And in the very rare instances where we see this decrease slightly, it means investors are at a loss, but are able to accumulate BTC at slightly lower prices. So to do this analysis, I'm using the Bitcoin Magazine Pro API. So if you're a site subscriber, you have access to all of this data and can do this type of analysis yourself. So what we can see here is loads and loads and loads of data. This is specifically the MVRV Z-score data point. What we can do here is I've isolated the previous cycles from the lowest closing price to the highest closing price through each cycle. So for example, here in 2011 to 2013, the cycle started with the lowest closing price of $2.11 before we ran up to $1,134.93. So I've compared the previous three cycles. The initial cycle we had was just too erratic. If we just see here, we can see that we'd have already topped out, already be in a pretty significant bear cycle. So really we can probably exclude that one, because I'd be pretty surprised if we're close to that cycle. So what we can do here is just scroll down, and what I've done is not only correlated Bitcoin's price action of our current cycle, but like I said, also the MVRV ratio, so we can see the investor behavior of this cycle compared to previous cycles. So if I just scroll down quite a bit of data here, we can see that our current cycle is currently the shortest compared to the previous three. So therefore, we're just using the data that we have up until this point. But it's probably worth redoing videos like this every few weeks or every month or so, just so we can get a little bit more of an understanding of where we probably sit within our current cycle when looking at previous ones. So what we can see here is, if I just zoom in a little bit, we can see that in our first cycle, the 2011 to 2013 cycle, we had a 0.87 correlation with our current price action to the price action of that bull cycle, which is an incredibly strong correlation, and a 0.82 correlation in the MVRV ratio, which again indicates that Bitcoin is moving very similarly to that double peak cycle we had in 2011 to 2013. The second closest, well, it kind of depends how you define closest, is the 2015 to 2017, which actually had the strongest price action correlation to what we're seeing in our current cycle, but a slightly lower correlation in terms of the MVRV ratio, the investor behavior, their accumulation and distribution of coins. And the lowest correlated by far is the most recent cycle we had in 2018 to 2021. We can see here that this had, well, pretty low correlations on both of these, still positive. So there is still obviously some following in patterns that we can see, not just in price, but in investor behavior. But I think for this analysis, we should probably focus on the following two here. So firstly, if we just look at the investor behavior aspect side of things, we can see that this initial cycle, this 2011 to 2013, this double peak cycle is showing a stronger correlation than our two most recent cycles, which is pretty interesting considering we've had this pretty boring period of sideways price action. But if we just remove these two cycles here, we can see that there was a big initial run up to a new all-time high, and we have had this sideways choppy period, maybe not as large drawdowns as we had in this cycle, but we could see a potential run up in the following weeks and months of our current cycle to maybe give us a little bit more of a stronger correlation with this. And if we look at another metric outside of the MVRV ratio, such as the value days destroyed multiple, we can really see a lot of correlation between these two cycles. So what this metric is doing is looking at the coin days destroyed, which is the amount of BTC that has been moved multiplied by the time it has been held. So for example, if I held 1 BTC and moved it after 100 days of holding it, I would add 100 coin days destroyed to the network. Same if I'd been holding 0.1 Bitcoin for 1,000 days, it'd be the same. However, the value days destroyed is then multiplying that by the US dollar valuation of this. Therefore, we can kind of see the profit, the extreme overheated market conditions a little clearer because we're now comparing the accumulation of BTC to the actual profit when it is moved. So we can see the massive red spikes in this 2013 double peak cycle, which is pretty similar to what we had here actually in our most recent cycle as we ran up to a new all-time high. And comparing that to the 2015 to 2017 cycle, at a similar point where we had the halving here and a bit of a choppy consolidationary period, we didn't see as huge amounts of long-term investors, large long-term investors realizing and taking profits. We only had these huge spikes on the value days destroyed much later in the cycle when there was only a few months left. So I can definitely see how there is some strong correlation in terms of investor behavior here, especially after we had this first initial peak in this double peak cycle before multiple months of a cool-off period as the value days destroyed metric ran down into this green area here. Very similar to what we're seeing in our current cycle. The only thing we need to acknowledge is, like we said, if we had to follow this double peak cycle, then it's probably going to result in some pretty wild price action over the coming weeks. So if we just go to TradingView and actually compare this cycle, what I've done here is just overlay the price action of our current cycle and our 2013 double peak cycle so we can actually compare. And what we can see here is, just so you're aware, we're isolating this period of price action over here. We can see that Bitcoin is actually following this quite closely. It know that the price action is a little bit different because the percentage gains have been, well, not quite as extravagant as we saw back then. But if I just normalize this down here so that the gains are very similar to what we've seen to our current price action, then you can see a lot of similarities with this big double peak cycle rally, where we ran up to a new all-time high, had multiple months of choppy consolidationary price action, and right where we're at now in the cycle, we'd see a huge run up, resulting in a price action peak in December of this year. And that would potentially run up to a price, roughly as we've aligned these, of around $140,000. So we could see about an 80K run up in the next few weeks, which I certainly wouldn't complain at. But is that reasonable? Who knows? Maybe investor behavior over the past decade or so has changed, and maybe investors now have a slightly longer time frame horizon, which is maybe where we should look to the 2015 to 2017 cycle as our most likely path to follow. If we just go back to the cycle growth since lows chart here, we can see that we are following this cycle incredibly closely, especially given the fact that the halvings occurred at a very similar point in the cycle. And again, we had multiple months in both cycles of very sideways, boring, choppy consolidationary price action. But what we can see is in this 2015 to 2017 cycle, we're again at a point where we're probably going to see some pretty positive price action. If I just remove the drawings and pattern we have on chart here and apply the 2015 to 2017 chart here. So I haven't scaled this down. This hasn't been adjusted to try and better fit our current price action. We can see that again, we're at a point in time now where Bitcoin could be on the cusp of a big breakout, which potentially highs prior to the end of this year, before 2025, close to $100,000, probably in the mid $90,000 if we were to follow that, before continuing to run up pretty much all throughout 2025 non-stop before a peak in November, October 2025 at a price of about $1.2 million. So we may need to scale down expectations slightly on the upside potential element of this pattern overlay. But ultimately, if we're seeing a similar time frame and similar price action correlation between this cycle and a previous cycle, then who knows? It's probably worth keeping an eye on metrics such as the MVRV and the value days destroyed to look for these patterns. But one thing that I did see earlier this week, which may give us some indication that we could see a massive rally in the coming weeks, is the McRib has returned, which I just thought this was a great little insight. The McDonald's McRib burger, I've never tried one. Every time it's been released, Bitcoin has doubled in just a few weeks' time. So maybe that 2013 double peak cycle could see us hitting $140,000 before 2025 after all. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, utilizing the Bitcoin Magazine Pro API, we can compare the raw data of both price action and metrics that provide insight into investor habits of our current cycle to our previous ones, excluding our first Genesis cycle, which has data that's a little bit too erratic. Our previous 3 cycles all do have some correlation to our current price action. And when we look at something like the MVRV ratio, we can see that investors are behaving most similarly to that 2011 to 2013 double peak cycle. And looking at this further, metrics like the value days destroyed, which is looking at the coin days destroyed multiplied by the US dollar price at that point in time, also support this cycle being very strongly correlated with that old double peak cycle we saw. However, this will likely be invalidated without a massive Q4 run-up to potentially $140,000 before the year end. But who knows, the McRib is back, and that might be the catalyst we need to really propel BTC to new all-time highs. But we do need to acknowledge that a probably more reasonable path for us to follow is that 2015 to 2017 bull cycle, which would provide an incredibly bullish 2025 for BTC, potentially seeing prices rallying to new all-time highs before the end of 2024 and a very sustained period of positive price action before topping out in probably October, November, Q4 2025, about a year from now. So both scenarios look good, but probably the 2017 path would give us a little bit more of an upside potential, a long, slower, healthier grind upwards in price action, or which leads to more sustained bullish price action. So if we continue to keep an eye on metrics and analysis like this, we can hopefully get some more insights into investor behavior and how we can maybe see Bitcoin's price action playing out when looking at comparisons to previous cycles. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live chats, personalized indicator alerts, in-depth crypto industry reports, API access like I used to date for this analysis, and a hell of a lot more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin potentially following that double peak cycle of 2011 to 2013. Do you think it's a little optimistic to see Bitcoin rally that hard in just a few weeks' time before the end of the year? Or do you think that we are more likely to follow that sustained, slow upwards growth trend that we saw in 2015 to 2017, which could still see Bitcoin new all-time highs before 2025, but would give us a much longer period of bullish price action, pretty much for a year from today? Let me know your thoughts in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.